Good afternoon. This is Mike Bertelsen, the Bear Market Investor. The market update for January 26, 2011. We're here looking at the S&P 500 stock index in the 2-hour time frame. Now, I wanted to show you the Elliott wave count that I have going all the way back to November, suggesting that, as you can see here, we're in wave C. In an ABC correction from the March 2009 lows. That's probably the most credible count that we have at the moment in terms of Elliott wave. And that would suggest that we could see an end to this rally as soon as now, or perhaps within the next couple weeks in this resistance zone right here. Should we actually push beyond that? Again, going back to the prior video, I do believe that we are on potentially up to that 1379 area, around the 78.6% retracement and the larger declining area of resistance and support in the market that's over a decade long here. So again, just something to keep an eye on should we actually push beyond those levels and move into an extended fifth wave. But this is the count that I have right now. From the sell-off in April 2010 to the bottom there, we've had a 5-wave push. This being the top of wave 3 here in November. Wave 4, I believe, concluded here, and that we've had total of 5 subwaves so far up. Now, I believe the first subwave ended at this level right here. The second subwave here in an ABC correction, we had an extended third wave. We had a fourth wave. Whether or not you want to place that here, or whether this is some sort of irregular triangle, and that the subwave 4 concluded there, it's probably generally irrelevant because it only, in a minor way affects the overall wave count here in this fifth subwave. Now, we could have concluded the rally from March 2009 today, but I suspect that there may be a little more upside. We did certainly bump against this area of resistance here. As I noted, we probably would start seeing this area of resistance from the 1300 to the 1350 and 1313 area, and we did in fact see that resistance. Now, we'll zoom in just a moment here, but there is a way to look at this suggesting that we have in fact topped, but I suspect that we may go a little bit higher. So the alternate scenario being that we somehow work our way up here, or have a correction and then work our way up there, or that the correction that I'm expecting in the VIX and that surge in volatility will just lead to the market selling off here and then holding up generally in a counter trend rally until perhaps as late as the middle of the year. So all that remains to be seen, but I do believe there's at least a very credible reason to believe that the market may be concluding its rally within this area right here. Now, we'll jump into the 30-minute time frame here, and I'll show you the wave structure that could end up suggesting that we did in fact top already, but it's not entirely clear at the moment. If we zoom in just a little bit here, you can see this would have been a wave 1. We had an ABC correction. I'm sorry, wave 1 concluding right here. That we had, little subwave right there. Wave 1, wave 2, wave 3 right here. We had a ABC correction, a wave 4. Then this was a little larger wave 2 here. So this being the top of 1, we had 2. We had 3 here. We had a 4th wave correction, and then we concluded the 5th wave today. I just don't know that I put a whole lot of credibility in that just yet. I mean, there is reason to believe that we're probably going to push into this area of resistance. Certainly in terms of price and time, that would look the best to me. But fifth waves can, be short. You can have long first waves in terms of price and time. Certainly a third wave cannot be the shortest wave, and in this particular case, if this was the conclusion of wave 3 right here, this would not be the shortest wave. This would be. So there's different ways of looking at this here, but Elliott wave, as I've noted here, is best looked at in retrospect. That means that as the data becomes available to you, as the market it continues to move up and down in price, and using your indicators as some guideline, you can then determine or have a good idea of what the market is going to do. But until everything unfolds, you don't have all the information in front of you. So that's really the caveat to Elliott wave, is that until things have really unfolded to near a point of completion, it's very difficult to know, especially when you have irregular patterns like this, whether or not you've actually concluded. But it certainly does count. So note that it could have concluded today, but I suspect we're probably moving on to slightly higher levels. We'll probably see another divergence here set up, similar to what we had back here, and that would inevitably lead to the market moving higher at some point. Now this thing could last into this week, or as early as this week into next week, or perhaps even the week after, before it finally concludes. But inevitably, I think we're very, very close to the end. Whether or not that be in terms of price and just moving eventually up to that 1379 area, or in price and time, and moving to these areas right here before concluding the rally. So, if you are long the market, use appropriate stops to prevent unnecessary losses from being incurred. Certainly you don't want to have your profits whittled away, and that certainly could happen if you wait this thing out too long. So as we see key levels of support taken out, it will begin to lend credibility to the fact that the market has in fact reversed. Now, just before I conclude this, I'm switching over to the daily time frame here in the Volatility Index. This is something that I was talking about yesterday, and I want to bring up once again. As I was noting that I did believe that we were probably as early as today going to get that thrust into this ascending area of support, and that's in fact what we did do. Now, I could be a little bit looser with this line and move it up or down. It's really, I would just call this an area of support or resistance, not not a very specific one. This is much easier to cite as a horizontal level support, just based on recent history here. So whether or not we continue lower or not, but this is certainly a reversal candlestick right here. Whether or not that plays out or not remains to be seen. The Volatility Index can do a lot of odd stuff here with regard to candlesticks, and candlesticks need confirmation. So whether or not this turns out to be a low remains to be seen. We had something there where after we had reversed, we got a similar candlestick. Obviously, this one was where we gapped lower and closed higher, whereas in this particular case, we gapped lower, went higher during the day before closing back down again below where we had gapped down. So in that respect, we did do exactly as I was suggesting. We did have that weakness there. Now, at this point, we want to begin to watch for a possible reversal in the VIX and an increase in volatility. Now, if we do come back down, I'm suggesting that we may either come down and back test the breakout of this 61.8% Fibonacci and the Fibonacci fan, or come all the way back down to horizontal support here at these levels. Either are entirely credible and either fit with the overall Elliott wave count within the S&P 500 that I've laid out so far. So let's go ahead and watch what happens over the course of the next few days, possibly couple weeks, but I do believe that the market is probably close to a top here, if it has not already done so, from the March 2009 lows. If it should extend out again, I'm looking for that to last as long as the June or July time frame. As we can see right here, it could even last into August, if that were the case. But if we have a attempted breakout that fails here of this area of resistance and come back down, that could certainly lead to at least a counter trend rally in the market, if not moving higher, and allow the market to at least hold up again until the middle of the year, before finally breaking out and seeing the real surge in volatility. So in any case, there you go. I'll try to create another video soon, but this should suffice for right now and give you a little bit to go on for the short term.